Hello everybody, Jackson here with the Well Squad. Today I'm bringing you an exciting new video about 4 stocks you should add to your watch list to either buy now or buy later. First off, we're going to start with Meta Platforms, aka Facebook. As you can see, Facebook is at $150. You can see this trend line that I drew down here. So we're down 50% from all-time highs. But anyways, back to this trend line. This goes all the way back to 2017. And basically, if you've been holding since this time in 2017 in May, compared to now, you have zero appreciation to show for, and that is a very bad investment. 5 years, no gains at all. So Meta Platforms, Facebook is hurting. It's hurting bad. I will say one of the reasons is their investment into the metaverse, not working out too well when the country's going into a recession. And it's definitely hurting their income and revenue and sales and operating expenses because they're doing this unnecessary investment into the space. But recently in their latest quarter, they said they'll slow that down, even though, as we can see here, this is their earnings. We haven't seen, no proof that the investors are happy besides that first day where, it jumped from 170 to almost 200, and now we're back to 160. Last time Facebook was this low was obviously during COVID, and before then during that scandal, if you remember, Analytica. I don't remember the full details, but something about analytics, and there's a big scandal there. But yeah, that was a scary time, and now we're even back to those prices. A couple months after major scandal happened, you'd be happy to buy Facebook at 140, 150, and then hold till it gets to 200 again. But now we're seeing those same prices, 160, 150. It's not looking good for Facebook. As you can see here, market cap of $433 billion. At one time, Facebook was worth $1 trillion. It is sad to see that gone, but it will come back one day, I believe. I don't think Facebook is down for the count. So not a good time for Facebook. It has not been doing well in this recession. It's actually fallen off way before most of this has happened. So let's go on to the next stock here. We're going to look at Nvidia. Nvidia is also one of those stocks that's just been hurting lately. We could draw another trend line here. Let's make it a horizontal line right at 150, and we're under that price now. We're at 145. But regardless, Nvidia used to be a $700 stock. It did have a stock split, which was, let's see the details, 4 for 1. So 4 shares turned into 1. Basically, it was $180 or $200 right here, so that's $800. And then, of course, 720. But regardless, it doesn't matter anymore. 145 is the new price. Now we have a market cap of $363 billion, only $100 billion below Facebook's. But you can see the meteoric rise in Nvidia lately. Since that crash in 2018, it was $73, then fell to $31, and then since then we've seen appreciation from 2019 to 2022 barely. We saw 913% growth in this stock in 1,000 days. That's just insane. So since that happened, Nvidia is now trading at a substantial discount. We can see here from the all-time high of $346, now at 145. We're down, similar to Facebook, 58%. Now you can see down here, if we zoom out, Nvidia has earnings on the August 24th. The estimate's 125. You can see right here, estimate was 130. We beat that by 6 cents. Last quarter, 132 or 123. Beat it by 9 cents. So you could see Nvidia, well, actually, since 2015 has not lost estimates compared to the actual numbers provided by them for their quarterly earnings reports, and that's something that should be acknowledged for sure. And you can see more of that down here. But regardless, Nvidia is trading at a discount and is one of the largest bull market stocks, contributed most by the bull market, and that bull market contributed most by Nvidia. So when this action comes back to the market, I do believe that Nvidia will be a huge beneficiary of that. So let's go to the next one. In a similar space, we're going to look at Intel. Intel has had a tough time lately. As you can see, we are at a price not seen since 2017, 5 years wiped out, just similar to Facebook. But this time, well, you can see Nvidia was at $69 and now we're at $36. So once again, not a good premise to be holding that stock. And you can see inverse to Nvidia, we're going down instead of up, although we have beat every single earnings report since 2014. Once again, a out earner in terms of the economic factor. And back in 2000, Intel was a huge proponent of this crash, where we saw prices go from 75 to 12. A lot better than most, because Intel is a value stock. It moves slower than most, and it holds more than most in terms of a per share basis, right? $36 for a stock this huge is usually unheard of. So with a dividend of 4%, you're looking at a not bad investment, not a bad yield straight off the bat, and that's with no appreciation. So let's hope Intel turns it around. It is similar but different to Nvidia. Instead of just microprocessors, semiconductors, they produce more computer hardware, but that is what they do. A lot of their business is with Nvidia, and they are competitors, as well as with AMD. But anyways, Nvidia I don't believe will be disappearing anytime soon. Definitely look into Nvidia. I'm sorry, Intel. Definitely look into Intel. I don't think Nvidia is disappearing anytime soon either. But I do believe the same for Intel, even though they are competitors. That's the best thing about this type of economy that we're in. You could have two companies, three possibly, and they all do well just because the whole industry is growing, even though they're competing for the similar business. So lastly, we're going to look at Nike, which is not a competitor at all. You can see here, and Nike hit a high of $180. Since then, we're at $100, so we're down almost half. 90 would be half. But you can see during COVID, we hit a low of 65 or similar 60. So we are still up from that COVID low, and many stocks are not like that. Facebook being an example. So Nike, one of those stocks that just can't disappear, right? You have too much of a strong consumer demand behind it to really evaporate into thin air, even with competition growing, right? Under Armour, Reebok, I think those are mostly of the past. Let's just check Under Armour stock right here. Oh, too many A's. Under Armour is facing similar pain, down to $8, similar to COVID and back in 2011. So Nike's doing better than Under Armour for sure. I don't think Nike will be going away anytime soon, and we could see similar to Nvidia and Intel, strong earnings since 2020. They have not lost a single estimate compared to actual results, even though lately, just last week, we did see a negative, I would say a negative pain point discovered in the earnings report, because it did fall, even though they beat estimates by 12% and revenue by 1.4%. So even though they beat estimates, that doesn't always mean the stock is going to go up. Actually, a lot of times it's the opposite. So I hope this video helps you. I hope you should look out for these stocks, because they are money makers in the future. I do believe that. We're looking at Meta, we're looking at Nvidia, Intel, and Nike. So let me know what you think of these 4 stocks. I do think they are great opportunities going forward. I am interested in what you have to say. hopefully it's the same. So thank you for watching. Until next time.